Hey everybody, it's Brian Shannon from alphatrends.net. Today is Friday, the 9th of May, 2025, and markets were kind of mixed here this week. Biotechs got hit the hardest, of course, and S&P and NASDAQ kind of unchanged here. Semis did have a better week, and oil regained some of its lost ground, still down 15% year to date. The big move was in Ethereum, and that's great because that's the one that I own. Let's take a look here, and hopefully you had a good week. We'll start out with the S&P 500, of course. So we are right at the anchored volume weighted average price from the election. That's that orange line right there. And this market has gone through every potential level of supply on the way up. It didn't find resistance at the 20-day moving average. It didn't find resistance at the anchored VWAP from the all-time high. It didn't find resistance at the 50-day moving average or the year-to-date anchor. So that's why I always call these levels of interest, not a place to do business. Now, on to the 30-minute time frame on the right, we did have a higher high, but we came back in, and that 5-day moving average is flattening out. Next week, it wouldn't surprise me if we started to see a little bit of profit taking, maybe come down, undercut this a little bit, and then bounce up, give people a false sense of confidence, get trapped below the 5-day moving average. Then we can start to look at some of these levels, such as the anchor off of the recent low in April. But we are still giving the benefit of the doubt to the buyers here, although the light is kind of turned yellow in terms of where we are in the S&P 500. And this is also the 61.8% retracement up in this zone. NASDAQ, that you can see that's a little bit more obvious, meaning from the all-time high to this year's low, we've come perfectly to the 61.8% retracement. That's what this line is. That's what that 61.8 says over there that you can barely read. But that 61.8% retracement comes into play along with the anchor from the election, that's the orange line, and that black 200-day moving average. So both of these markets are having trouble, so far at least, with the 200-day moving average. Now, on the shorter term time frame here on the right, what we see is we saw a higher high and then it came back in. Oftentimes we see from failed moves come fast moves, similar to the peak over here. That from that failed breakout came a fast move lower. We have the possibility of that happening here, and I think just as long as we're below this level, be a little bit defensive. We might even run up through there, do this, and then start to come back down. But I think you've got to be looking at this and saying, we just ran from 430 up to 490. That's a 15% move, basically. So a little bit of profit taking would not come as a surprise to me. Maybe down to the anchor from this low. That would bring us into this zone near 472. There's nothing here indicating that we are ready to decline, but we're becoming more neutral. And after a large advance into an important zone of potential supply, and it becomes more important because we have the possibility of 3 different groups of participants coming to the same conclusion in the same area. That is the Fibonacci traders, the year-to-date, I'm sorry, not the year-to-date, but the anchored VWAP from the election and the 200-day moving average. At each of those levels, there might be a group of participants who's saying, this market has rallied 61.8%, so I'm going to stop buying up in here. Others will say, hey, it's 61.8%. I'm going to start taking some profits off my bounce trades. Others will say it's 61.8%. Let's start selling short. So what we have there at that 61.8% retracement is less demand and more supply. We don't see that evidence yet, but that's the thinking of how people use these tools. Same is exactly true with the 200-day moving average and the anchor from the election. So if we have these different groups of people coming to the same conclusion in the same area, is it too obvious that it doesn't work, or does it become self-fulfilling in this area? We'll find out next week, but I know that it's prudent to be cautious in here. We're going to talk about crypto in here today as well, so just hang tight for that. The Russell 2000 has been pretty much the laggard, but it made an important progress this week in that it made it up beyond this prior band of support, which had become resistance. Now, it actually made it back above that last week, but we tested it and held it this week. So this is clearly the most important level in here, really at about 196.5, 197. As long as we hold above that, then the intermediate term time frame, we give the benefit of the doubt to the buyers. So if it was to come down to there, we might come back up and then break down because we would have that 5-day moving average, the orange dash line in there, starting to turn lower. But for now, as long as it holds above here, I would not be aggressive on the short side. If we broke down below it and then got trapped below it, then we could see things get ugly, perhaps down to the anchor from the April 7th low. Semiconductors, as noted, had the stronger week in here. They were up 2% this week, and they continue to make this pattern of higher lows above that rising 5-day moving average. We slowed down a little bit this week, but we had these higher lows here as well. Up above, we're right at the year-to-date anchor. That's that solid blue line. Above that, we have the 200-day moving average. That's the 2-year anchor and the anchor from the election. This is the 200-day moving average in there. So the uptrend that we've seen over the last month is still intact here. There's no signs of slowing down. We're stair-stepping higher. Prior resistance holding as support in this case right here, and then in this case here. So if we break that level, then perhaps we drop down to the next level. Then if we create a lower high, then we could see the possibility of a turn lower. And that's the way that markets turn. We saw that the biotechs, again, they were down 8% this week. That was, pretty brutal. They're right on the anchor from the April 7th low for the broader market. They've already undercut their market low, which was a couple days later. So we're right here on that anchor. We bounced from it briefly this morning or yesterday morning, and now we're right back down to it. This is not a good sign. We want to really see these biotechs hold in here. If they can hold in here, perhaps they can build for some continued bounce back up towards this 85 level. But right now, this is the weakest group. So don't be looking to buy it because it's weak. Look at it and say, this one has the potential of breaking down. Now, this week we saw that the potential for a bigger breakdown came from the energy names. They were hammering away at the anchor from the April 7th low. And as I told people all week that, we're suspect on these. We're not ready to short yet unless it did something like this and broke down below that level, then our stop would go above here. But we were highly suspicious, and I was thinking it would break down. What I said was if it gets back above 81, then it's out of the danger zone of an immediate breakdown. So we avoided that without taking a short. There was no loss taken. But you look at it now and you say, okay, where are we now? We've gotten above that level that makes it more neutral, but does that make it bullish? Not in my opinion. We're still stuck below this little band of resistance right here. And that, of course, is this prior bigger band of support as well. So energy names, I think they're just kind of in no man's land. Maybe you could get a decent little trade off of here if you did, on the break of this little band of resistance. Perhaps it runs up to the 50-day moving average. That would be a decent little trade, but I would not expect it to hold. It could, but what are the odds? I'm more interested in the odds than once in a while something happening. Financial stocks have been the strongest. They, and this is maybe where we are in the Russell 2000 in that we broke above that key level and are holding it. So the Russell 2000, this is that similar area that to the, I'm sorry, where was I? I was looking at the financials, to the financials regaining this ground. I was looking at the financials over here thinking, hey, they're likely going to pull back. They didn't. So there was no short position to be taken. Instead, it continues to rally. And here we still see a pattern of higher lows. It's maybe getting a little bit tired in here, but the buyers are still in control on this. We already spoke about the energy names and the biotech names. Let's take a look at a couple stocks. Let's do it this way first. Let's take a look at, here we have 65-minute or 130-minute time frames. So there are 390 minutes in a day. If we're looking at 190 minutes, 390 minutes per day. Divide that by 3 is 130. 130 times 3 is 390. That means each one of these bars is the same length, 2 hours and 10 minutes per day, because the market is open 6.5 hours per day. So there are 3 equal bars per day. Now, I've got Apple, Amazon, Google, Meta, Microsoft, Netflix, Nvidia, and Tesla. What do you notice about these stocks? Well, Apple is below its declining 5-day moving average, and it's trying to hold the anchor off of the April 7th low. It's not convincing yet. This might be able to turn next week. Amazon, choppy uptrend in here, but still making progress. These are the higher lows, so if you're long a stock like Amazon, protect your gains underneath these higher lows. Google, Alphabet, is the worst. It is below the anchor off of the April 7th low, and it's below a declining 5-day moving average. It tested that anchor from the April 7th low from below and got rejected. That's not a good sign. Meta has just had a nice run. It's got this pattern of higher lows. I would say protect your profits in there. If we were to pull back, it might come down towards that 558 level. Microsoft has been a monster, and it's just, it's running away in here. It's got the higher lows, so protect your gains. Netflix has been a monster as well. It's starting to slow down. You can see the 5-day moving average is flattening out. It had ridden this 5-day moving average absolutely perfectly. Now it's showing maybe some signs of distribution. It wouldn't surprise me to see a little pullback in Netflix next week. Nvidia made it past an important level here. As we'll see in a moment, though, it's still at an important level in the daily time frame, which makes me think that maybe it's not going to continue to make it through there. And Tesla broke an important level here today. While I have TradingView on here, let's talk about, I want to talk about Ethereum because that's the one I've been talking about. If you go back a few weeks, you remember that I pointed out this anchor. This is the anchor from the inception of trading on Coinbase. So from the very first trade on Coinbase right here, about 6 months after Ethereum was an actual thing, it found buyers at that anchor, and then it found sellers there. And then in 2022, buyers, late 2022 buyers. And as it was coming into there, I said, here's a level of interest. I'm not going to buy there, and I didn't buy there. I did not buy there. It was the perfect low. Instead, where did I buy? I bought strength after it had held that volume weighted average price. I bought right here and right here. My average cost was about $16.30. Today, I sold 80% of what I held at basically about this price right here. I've got a 20% position, and I'm going to hold it just in case it continues to move higher. I don't have high expectations. I think this is likely, 25-ish, 26-ish, going to kind of cap it for now. But that was a great rally. Hopefully you were involved in it. I did not get involved in Bitcoin. It doesn't bother me one bit. We had held this anchor, though. Last week we spoke about the anchor from this move and how it was making higher lows above it, and we exploded off that today. So Bitcoin, it behaves well. It looks like it wants to continue maybe up towards that 110 level before it's ready to take some profits. I would say just be aware that the trend remains higher. If you're long, ride the trend to the point where it makes sense for you to get out and lock your gains in. I'd like to take profits. That's why I sold 80% of my Ethereum today. It's been a great hold. I think the majority of the profits have been made there. Palantir, let's talk about that. Palantir did a little bit of what I wanted it to do today. It pulled back. Now, it was stronger this week than I expected. What I want to point out about Palantir, and by the way, these symbols here, PLTU, that's a double long. Palantir, and PLTD is a single short. So you go long PLTD if you think Palantir is going to decline. And if you buy PLTD, in this type of environment, expect to see a chart like that, of course, because Palantir is in a strong uptrend. So the inverse would be in a downtrend. Anyways, the point I want to make about Palantir is the way it behaved, especially right here before the rally right to the previous highs. They reported earnings this week, and from the earnings report right here, the buyers did regain control in spite of losing some ground this week. So that's the average price since the earnings report. Maybe we settle down a little bit more and then rally, but it's still clearly a very strong stock. The one that I got involved in on Wednesday, I got kind of lucky with my timing in that, is that I bought it near the close on Wednesday, is Robinhood. And Robin had good earnings recently, and it has kind of almost the same exact chart pattern in here where it got above these key moving averages, created this little flag, and then got going. So there's one other stock that looks similar to that, and that's Grail. Grail kind of has the same thing. It's holding these key moving averages, the anchor from the all-time high. And this is what I drew in last night, that I want to see it pull back. So Grail is a good one for next week, that if it continues to pull back, then we want to buy some strength after the pullback with a stop under the higher low, which ideally would be right around here. So keep a close eye on Grail next week. Let's take a closer look at Apple, as I mentioned. Now, Apple, it's going to be remounting that 5-day moving average on Monday, and the 5-day moving average will be flattening out because we get rid of this data right here. So that means the 5-day moving average will be flat. So, here's the thing, is it looks like you could probably get a decent trade in Apple on the upside. Initially, I would not trust the move, however, and here's why. When we look at the weekly chart, we've still got a declining 20, 31, and 42-week moving average. What that is, of course, is the declining 50-day moving average, the 150 and the 200. I don't have the 150 on there, but that's basically 31 weeks. They are all declining. That is typically not a condition where the buyers regain control. The danger is, let's say you buy it in here based off the intraday action. Maybe it'll run up to that 50-day moving average. That would be a nice trade. If instead it gets trapped below the 20-day moving average, which you can see will start to flatten out on on Monday, and then maybe roll over if we get stuck below it. But if it does this and then breaks down, then I think you could see a pretty nasty continuation to the downside in Apple. So if you're trading it in this zone for a bounce, know where your stop would go, perhaps underneath this level right here. By the way, tune in Sunday night live on Twitter. You have to be looking at my Twitter. I will be live there taking stock requests. That is 8 p.m. Eastern. I didn't do it last week because I was traveling, but real quick look at NVIDIA, and here's what I'm talking about. This is the year-to-date anchored VWAP, so it behaves well in that it got back above this band of resistance, but it's also a little bit extended, so I'm not thrilled about NVIDIA. Anyways, have a good weekend, everyone, and tune in on Sunday night at 8 p.m. Eastern on Twitter at Alpha Trends. Have a good weekend.